NIO continues to rise, continues to outperform, and continues to be a light in a relatively dark economy and stock market. We have seen other EV stocks beginning to lag, die down, and even significantly drop, but the same cannot be said for NIO. What is going on with NIO stock? If you haven't yet bought stock to this company or are planning on buying more, should you buy now or wait? NIO could make you very rich, and here's 6 reasons why this stock will continue to succeed. If you haven't already, hit that subscribe button. I do a ton of videos like this going over EV stocks, tech stocks, IPOs to help you navigate and make informed decisions on the stock market. I focus on disruptor companies, and here's one of my all-time favorites. These videos take quite a bit of time and effort to put together, so smash that like button. It really helps out with the YouTube algorithm, and more importantly, I'd really appreciate it. Alright, without further ado, let's get right into it. Going to Monday's trading day, we saw almost a 5% drop in NIO's share price. However, this fared quite well compared to some other EV companies out there, such as Tesla, Hyliion, and Workhorse. As we all know, on Monday, an absolute massive sell-off took place. Possible sector-wide weak third quarter's earnings, questions around how presidency will impact the economy and stock market moving forward, and many investors just deciding that there are too many questions, too many uncertainties to stomach, and instead de-risking their portfolios. Now, as that mad sell-off took place, many investors were expecting somewhat of a consolidation to take place. However, fears continue and the broad market continues to slide. But you know where I'm going with this if you are a NIO fan. As large companies, small companies, virtually every sector considerably dipped, NIO blows them all out of the ballpark with a 9.30% single day gain. This is absolutely incredible. I'm just so happy and ecstatic for this company. It seems that NIO has some sort of fortification, some extra wide moat built around it. Will the suit of armor that NIO seems to be wearing continue into the winter months? So why did this take place? And can NIO investors expect more of these huge gains to take place in the coming weeks and months? Let's discuss. 6 main catalysts are driving the share price and will continue to provide a suit of armor around for NIO. Number 1. As investors sell off due to fears of a slowing or stagnating economy within Europe and North America, there is quite a different sentiment taking place elsewhere in the world. As cases from the health situation are surging in the United States, the European Union, and the UK, many legacy brand automakers are bracing for very tough third quarter's earnings due to weak geographic economies. Unfortunately, there's no clear end in sight to the current madness, and many of these companies are projecting slowing sales and tough times ahead. The situation could not be more different here for NIO. As NIO currently only delivers units within China, they are not projecting slowing sales, but quite the opposite, exponentially increasing sales. China has taken a very firm, hard approach stance to the health situation in attempts to nip it in the bud. This has proved invaluable to companies that are situated and primarily operate within China, as things have changed much less there than it has in other countries. They seem to be operating within somewhat of a bubble, and at least for the time being, seem to be really benefiting from this harsh lockdown approach. The auto market in China is entering its historically highest delivery months, as towards the end of the year, there is typically a bulging of sales. The market has completely rebounded since the extreme lows earlier this year. However, the same cannot be said for companies operating outside of China. This fares very well for Chinese-based Hefei Province NIO. Number 2. Strong sales leading into the quarter. Deliveries saw a massive jump from Q3 2019. They more than doubled this figure, delivering 12,206 vehicles in Q3 2020, an increase of 154%. Management and NIO had previously predicted in Q2 between 11,000 and 11,500, so beat their uppermost margin by over 700 vehicles. Their guidance had predicted between 570 and 596 million in Q2 revenue, so it'll be very interesting to see where their actual recorded revenue will fall. I suspect closer to 700 million. This would be huge for the company, their bottom line, and for investors moving forward. I suspect that NIO will have also improved its already very impressive vehicle margin, as Li Bin, the CEO and founder of NIO, in an interview recently with Bloomberg, declared that their margins and improving margins were of utmost importance. Looking at their Q2 margins, NIO's Q2 2020 vehicle margin was 9.7%, which was a massive jump from 1 year previous of negative 24.1%. Their Q2 gross margin was 8.4%, up from 1 year previous of negative 33.4%. One would be safe in assuming that NIO will have even further improved these margins moving into Q3, which would be absolutely huge for investors to see. I will have a video highlighting everything you need to know about their Q3 earnings release day on the day it is released, so make sure to hit that red button down there. Number 3. Release of their newest vehicle, the EC6. I've said it before and and I'll say it again, I absolutely love this vehicle. I think NIO really needed a sedan within the roster, and I couldn't be happier with how this vehicle has turned out, and its very impressive specs. They were able to deliver 16 EC6s in just the last few days in September, so to see how this vehicle was really received widely throughout an entire month of deliveries will be very interesting. I predict that it'll have done very well, as there are many indications pointing to the Chinese consumer favoring a smaller vehicle. Whether or not sales of the other pre-existing SUVs, the ES8 and the ES6, will drop due to the EC6 sedan finally on the market remains to be seen. However, I think what is likely to happen is that sales of the already falling ES8 will diminish, and that people will essentially choose between having an SUV, in which case they'll choose the ES6, or a sedan, the EC6, potentially leaving the ES8 the older, largest vehicle they have behind. However, either way, I suspect overall vehicle sales will be at all-time highs and continue climbing for the remainder of 2020. Number 4. Supply chain issues have been solved. Li Bin, in the interview with Bloomberg Business, explained that demand had been at all-time highs, yet the supply could not keep up, as the NIO JAC headquartered manufacturing plant had run into output issues. This has since been mitigated, and NIO is currently able to manufacture 5,000 vehicles per month, a number they are literally weeks, if not days away from hitting. So expansion programs are a must moving forward. I'm hoping that in the coming weeks and months, that NIO will be able to potentially double this figure, as I don't think an output of 10,000 vehicles a month is at all out of the question. The demand is there, and now we need the supply to meet that demand. Number 5, continued buyback of the company from outside investors, relaying to a higher value per share for NIO ADR investors, which is us. This is something I've talked about in lengths in other NIO videos, so I won't get into the intricacies here, but instead I'll post the link to the video in the description below. I highly recommend checking that video out after watching this, as it is important information that you as an investor need to know. Share dilution can alter the trajectory of a company, and these typically offer ideal points to buy in bulk if you believe in the long-term success and well-being of the company. NIO's successful buyback of NIO China has related to NIO's stake in the company increasing from 75.9% to 86.4%. This is fantastic news for investors' wallets. Number 6. Lastly, in Q3, NIO has just begun their battery as a subscription, or BaaS service, in which buyers of their vehicles have the option of renting the battery instead of owning it, paying a small monthly subscription fee. The owners can choose to buy out the battery at any time they'd like, or even to upgrade or downgrade it, giving the consumer more choice in the matter, but more importantly, drastically decreasing the cost to actually purchase a vehicle. A consumer can have up to 10,500 USD off the purchase price of the car, therefore severely lowering the barrier to entry point and allowing more consumers to enjoy and purchase luxury electric vehicles. This company is one of my favorites. I've been with them from the start and will continue for many years to come. I'm consistently purchasing up shares on dip days, as the short, medium, and long term for NIO looks extremely bright. Anyways guys, I have very interesting NIO videos coming in the pipeline, so make sure to hit that subscribe button, smash the like for the YouTube algorithm. I'd really appreciate it. Anyways, see y'all in the next video. Cheers.